Good morning. This is Larry Edelson, editor of the Global Wealth Report with my Thursday morning update. This is my first video update for you. I'll fill you in on a couple of things. You'll get these each week from me like you will from my colleagues. I'll give you a quick update on my insights into the market and what's happening. Keep in mind that these are unscripted. I do not script my notes here. I tell you exactly what I'm seeing, and I basically play it by ear so you can feel like you're here with me and you're getting my immediate thoughts and into my head as I talk to you. Occasionally I may look down at my trading screen, the markets, maybe at a couple of notes on things that I want to highlight with you. And in the future, as we improve our technology, I hope to be able to give you some shots as I travel around the world and show you charts on these videos of what I'm specifically looking at so that you can see also the market action from a technical basis that I may be pointing out to you. Let's start today with gold. Which is one of my favorite markets. I'm a long-term student of the gold market, and this ties in very nicely with my first issue that I sent to you this past Monday, where I talked about the changing value of money and how the G20 nations, when they meet on April 2nd, are going to be working on what I call the G20's secret debt solution. This is it's a theory I have and a view I have, but it's based in historical precedent, and it involves gold, and it involves money, the value of money, and it will affect every individual on the planet. Basically, in a nutshell, as you read in my Monday issue, what I'm referring to is the global financial crisis and how the powers that be, so to speak, will ultimately try to solve it. Again, it's based on historical precedent, and I want to go back in time a little bit. Back in 1932, at the bottom of the Great Depression, when it was really, really bad, President Franklin D. Roosevelt confiscated gold, and he raised its official price, that is the government price of gold, from about $20.32 to $35 an ounce, and he effectively devalued the dollar by close to 60%. That helped kickstart re-inflation of assets, and it inflated away a lot of the debt problems during the Great Depression. And although many say that the effects of the Great Depression lingered for many, many more years and led directly to World War II, in fact, prices, not only in the stock market, but in commodities and in wholesale prices, consumer prices, and industrial production, business activity in general, actually bottomed when Roosevelt devalued the dollar and raised the price of gold. That technique has been used in many third world countries. Although we're no longer on a gold standard, many third world countries, when they've gotten into a debt morass like the first world has today, have depreciated or devalued their currencies in order to inflate away debts and to kickstart inflation again. I believe that's going to happen on a worldwide scale, okay, soon. And I believe that the G20 meetings, the first meeting occurred November 20th of last year, the second meeting is April 2nd in London, is going to be seminal in pushing that agenda ahead. You're not going to hear much about this in the news. They're going to keep it quiet. They're going to keep it largely behind closed doors. But I have absolutely no doubt in my mind that this is the hidden agenda and the ultimate outcome of the so-called international financial conferences that are occurring at the G20 meetings. And when you hear words of a new monetary order, a new financial architecture, new financial regulatory rules, it's more than just banking regulation or Wall Street regulation that these authorities are talking about. It will include a systematic devaluation of paper money in order to inflate away global debts. This is something that, again, I simply cannot underemphasize the importance of this. How does it affect gold? Well, obviously, gold would trade substantially higher. Gold is a direct reflection of the value of paper currencies. When paper currencies, the purchasing power of paper currencies is falling, the purchasing power of gold is rising. We have seen recently, just in the last month or so, new all-time record highs in the price of gold in terms of the British pound, in terms of the euro, in terms of the Swiss franc, and we have seen just recently another stab at $1,000 an ounce in the U.S. dollar price of gold. Right now, gold is backed off from $1,000. I believe it's consolidating, and we'll probably see another new run at record highs very soon. In stocks are still groping for a bottom, which may come soon. I don't know if that's going to be 6,500 on Dow, 6,000 on Dow, it could be 5,000 on Dow. But according to my models, we're going to see some kind of bottom in stocks soon, and a very large multi-month rally. It may not be the end of the bear market, but I have absolutely no doubt that a strong rally is coming in stocks. I would not, however, run out and buy stocks just because I said that. Please don't. It will require some very fine-tuned timing, which I give my subscribers in my monthly Real Wealth report via the monthly issue and flash alerts that I can send out. Other markets, we're seeing a lot of across-the-board confusion. This economy, the U.S. economy, we all know it. There's no sense going into it in depth. It's in a shambles, and it will be in a shambles for years. However, that does not preclude strong rallies in natural resources and in stocks. So keep that in mind. Stocks, as a matter of fact, in general, lead the economy. They do not lag the economy. They look forward, not backward. So the news that you're hearing about that's coming out every day that's so bad, remember, that's what's happened. It's not necessarily what's going to happen. We all, as investors and analysts, have a tendency to extrapolate news in a linear fashion straight into the future. But the news is a lagging indicator. It tells you what's happened. It doesn't tell you what's going to happen. The stock market itself, and in most cases natural resources, are a better indication of what's going to happen. To give you a very simple, basic level example, how many times have you owned a stock that came out with fantastic earnings, surprising everybody, and the stock fell? Why? Because that's old news already. The company had terrific earnings. That was last quarter or last 6 months or last year. That tells you nothing about the future. It could have had a fantastic quarter, and next quarter is going to be lousy. So that's just a little, example there of some of the insight and wisdom I want to give you via these video things. Keep in mind, again, the market looks forward, not backward. So don't put all your eggs in one basket and make investment decisions entirely based on news. I can guarantee you will be a perennial loser in the markets if you base your investment decisions simply on fundamental news. That's it for today. I'll be with you in my written issue this coming Monday, and again by video next Thursday. It's great having you on board. I look forward to a long, profitable, rewarding relationship. Thank you. This is Larry Edelson.